All right, so the ES. Now that's a ginormous move right at the end of the day, right? And I knew that it's going to happen, but you know, congratulations if you held the position all the way to like to the last minute, and you can kind of see like how that zero DTE can really fluctuate, right? We went up to like 2.7, then 2.5, and went all the way down to like 30 cents, and then had somebody talk about whether to close a position because it's already down 80%. And that's like kind of like the whole point. We have to let them go almost to zero, right? Like I think we gotta literally leave them to like the last minute. And that was like my, and we in the presentation, like I just want to just affirm the material that I presented in the presentation. I mean, today was a pretty tricky day. Okay, I have to admit, like I didn't expect. I could see it on the systems that the systems were ready to move higher, but you know, look at the way that the premiums were moving. It's just like you can't put like, let's just say you got $1 million. You're not gonna put like $1 million on a zero DTE, $3,965 calls, right? It's crazy. Like you can't. So that's why we position size so tiny, but because we're like a small account, we kind of have to like grow it. And I mean, when it went down to 30 cents, I was like so tempted just to like to buy it. But then I mean, I'm kind of just doing this as a campaign, right? Just doing this together. And I know some people will use their own funds and maybe scale indifferently, but like what I'm trying to do here is I'm trying to get that $400 account and then grow it to 10,000 without using any additional resources, right? And you could clearly see that when it pulled back to 30 cents, that was an opportunity to buy 10 contracts for $300, right? And $300, I mean, when I look at, like I said, this is like the phrase that I always say. When I look at everybody's accounts that is managing here, I think everybody can afford $300, right? But is it like, do I want to step out of that campaign boundary and say, screw it, let me just use my own money and just buy 10 projects and just pretend and then say I made $5,000 on $300 investment? And is that fair? I don't think it's fair because I committed to a campaign and it's so it's like frustrating. I was like, I was watching the contracts move, and this morning as the contracts pulled back, they pulled back to $1.25, and I was like, I told everybody I was just gonna buy it at $1, right? So I was thinking, should I increase the threshold to $1.25 to $1.50? But then that would be, eating into a little bit of our balance, right? Close to like 50% of our starting balance. I'd like to use 25%. So these are real. This is the option game, and I mean, at the beginning when we're trying to grow the account, I mean, goddamn, that 30 cents, I should have just waited, literally that last 30 minutes, right? And I think if tomorrow we get, so I don't know, did everybody get into that position and close at least at $2? I know that a few people closed at $3. Okay, so you're almost up like 70% of the balance, I guess. I don't know. I started off with 400 and I'm at 489. I could have closed. I had an opportunity to close it where it was up at 500, but if I had those contracts at 30 cents and bought how many, maybe four contracts at 120, maybe three contracts at 100, three contracts at 30 cents, and then close them off at like 2. That's 600, right? And then if I was stupid crazy, then try to close it at 5. That would be 1,500. We're like 80% closer to the 10K, right? On just one stupid little trade that we could have opened up in the last 30 minutes of the day. So so just in summary, in a recap of what happened, I mean, the market pumped higher into CPI. I looked at the option chain and it's and the original plan was to try to close some positions today with profit and then use that profit, but the profit came in the last minute, right? While we were drawing in a drawdown. And then I looked at the option chain forward tomorrow, and hopefully, we get lucky and we get a long red hard candle, because if you see on my screen here, we're right up against that 200-day moving average, and I think we get like a nice pullback right to retest that 3,942. That's where the 6-day moving average should be. Like the 6-day moving average has been moving up from 3,888 to 3,908. So that's like what, 26 points. So another 26 from 3,936. So around here, I mean, I think it should probably pull back and retest that wick right there. So you can see that wick right there. So I would say we get a pullback right to 3,934. That would be a double bottom. And then and we just buy it. Like we just buy those contracts without even thinking, just one. Because we have, you got like, I mean, you should have at least $100, right, from the profit that we made. And if we get like a crazy move tomorrow due to CPI, we'll wait about 3 or 4 or 5 minutes and see if we can catch a wolf wave on the sell-off, if there is a sell-off. I don't think it's going to rip up. I mean, the S&P has moved up quite a bit, and this is called the Magic Mike candle. I was trying to catch this last year, and it didn't work. Remember? So here we got that Magic Mike, and it ripped up the pole, and then hit the 200-day moving average. So I think there's going to be a pullback all the way down to 3,900. It's going to open. How's it going to open? So tomorrow morning, so futures opens today at 3 o'clock p.m. Eastern time. Oh, sorry, not 3 o'clock. 6 o'clock p.m. Eastern time, and it'll open up right here. Okay, so it's going to probably open here or right there at 3,992. That's what's going to happen. If that happens, that's good. Okay, then we know that there's a chance that we get a nice long and red hard candle. That's the one we can make 30, 40x. Today was what? If you bought 30 cents and you close it at 5, that's like, is that like 10x? I think it was 10x, right? I don't know. I'm not really good at thinking at 10, 20, 30x, because this is like, those are numbers that are not very common to me when we trade, right? We're looking, usually when we trade equities, you do like 100, 200, 300%, 3x. But these are SPX, so we're doing such a small little count. We're looking for 10, 20, 30, 40, 50x tomorrow. So the game plan for tomorrow, when the futures opens and it opens flush, like right at the close, which is still open, but 3,000, let's say 3,990.25. Let's just say it's flush, okay? Then we got a Fed agent speaking. He'll probably pump the market up, right? And then CPI will come out, and then that will dump the market, vice versa. It could happen either way. Like maybe in order for, it could have it. So CPI, the Fed speaks, and then he pumps the market up a little bit, right? 0.345%. So then it hits the 200-day moving average, but it opens flush, and then it makes a little wick there, and then CPI comes out and then flushes the market all the way down to 3,934. That's double bottom, and that's where you want to buy. Like there's not going to be a wolf wave fast enough to catch that. So what the game plan here is tomorrow. If we get this scenario, you gotta listen to me carefully, because my alerts will come out too slow. You just have to remember what I say, okay? Because I don't know, like I think the numbers are like, I can see it in my eyes. I can see it happening. there's no guarantee, but this is what I think is going to happen. So whatever you think is going to happen, that's the game plan. And once you see it happening, you get ready. Don't message me, okay? Don't message me when I already have problems with my broker RBC. They're so damn slow. Okay, don't message me. Just remember what I'm saying. Even take notes, okay? Because this could be like a huge move, right? And I don't think in January we're gonna get that 3,810 gap filled, unless, yeah, I don't unless the futures opens inside here. So if futures opens like right around 3,983 or somewhere around inside the body, then I think the market will sell off all the way down to 3,810. Not by tomorrow, but in the next 2 to 3 days. But I think that's unlikely. I think what's going to happen is we stay in this range. Okay, just listen to me carefully, because I do not have any time. I'm not going to have any time to answer any messages tomorrow. You know, like I said, I'm like sending out alerts in the email and stuff. So that's where we're trading here. The day will close tomorrow in here. It's not going to, I don't think it's going to break out and run up to like 4,200 recorded. Yeah, I think I'm recording it, right? Yeah, I'm recording it. I don't think it's going to break out and run up to like 4,800. I think this big, long and hard green candle today is already priced in the CPI data. Okay, so then, but what it hasn't priced in is the Fed agent. Okay, Fed agents, they're going to do something to the market that we don't know. Okay, last CPI there was no Fed agent, so I was thinking today, oh shoot, you know, what's the probability of a Fed agent, you know, just messing things up? It's pretty high, because we don't know them, they don't know us, and we don't care about them, and they don't care about us, right? So they don't even care about you. Obviously, from 2021, they don't even care about artificially crashing the market. So because we don't know what they're going to do, and then looking at the premiums are jacked up. Okay, so we can't even get into a contract that's even worth our risk. Like we get into a contract that's 50 cents to $100, we have to go like almost delta like 0.02, which means that we have a 98% chance of losing all our money. And that's not what we want to do. I think what we want to do is see if this happens. Okay, so listen carefully. This is the most important part here to make 30, 40, 50x, where the contracts can go from 50 cents to like $60, $70. Okay, this is the moment. Okay, and I thought we would get the moment, an easy moment to position into CPI by the end of the day today, but it's not a doji, right? Look at how long and hard this green candle is. It's too big. Okay, that's what she said. So you can't expect another long and hard green candle, right? It's just, there's only so much of a green candle you can take. So what's the next best thing? It's a Magic Mike BLT. So that would be that tomorrow the day will end as a BLT, but we should get a nice long and red hard candle to the downside. If we catch that, if that actually happens, you'll know when that happens by 9:30 a.m. Eastern time. Market starts to flush. So as it starts to flush, it could stop right here halfway at 3,963. But you'll see the VIX going long and hard too. Everything is going to be like super long and hard. Okay, it's like something you don't really want to touch until everything is over. So it'll just drop all the way down here, and if it gets down here, that's super awesome, because then the contracts that are maybe trading at 3,978, then those would be worth like probably like 50 cents. And then if it'll take the whole entire day to get all the way up here and then form a doji flush to 3,989 from 3,980. So let's just say $10. If you buy those for 50 to anything less than 50 cents, you got like a 10x there, right? So that's the game plan. And I don't know, maybe I'll buy like 3 contracts, use 150. So I have $488.60. I could have, if I close those contracts properly, because it's the first trade, and I only put in 1 contract trying to grow the account. But now I have a little bit of profit, a little wiggle room, $88 wiggle room to kind of lose and not be in such a bad state on an awesome opportunity. So if I lose, like if I put in $150, then if I lose on all of those contracts, then my account will be at like 300 and $380, 300, and that's probably 350. Okay, that's maybe 360. That's not bad, right? To take a risk that can potentially, with those 2 contracts, go from like 50 cents to $3,000. Okay, that's the mindset you gotta have. Like I know the probability is really really low, but when that candle is turning long and red and hard, and it's going double bottom here on this wick here, that means like the whole entire market is shorting the United States of America. That's the country that you guys live in, okay? That's the country that I wouldn't mind living in, but I got my family here. This is the way that life worked, right? I'm here in Canada, in Vancouver. So if you think you want to short America because inflation rates and all this garbage, and a crown of broccoli these days is costs more than a 12-pack of beer. If you think that's going to cause the market to sell off down all the way down to 3,010, okay, go ahead, try to do that. But I'll take the opposite side of that, because it looks like we're in an uptrend, and we're in January, which is a pretty bullish month. Yeah, month. So let me see. The counts are pretty much long, and yeah, so I'm running systems here, and it looks like most of the accounts are long, and they're going to go through like a stress test. So that sharp rally is not going to be like, let's say for example the market opens the pre-market and everything is dumping really hard, right? You know what? Like remember when Tesla was down like 10% last week, or and then it just ripped up, and then the market just went nuts. Okay, it went down 10%, and then it went up plus 3%. Okay, that's what could happen tomorrow. Okay, but I don't think it's going to happen to that magnitude. That was just that was a sell-off that capitulated a lot of the buyers. So tomorrow there's going to be a 10, 20, 30, 40, 50x opportunity. The game plan is to remember that because we don't know what's going to happen tomorrow. If there was no Fed agent, then I would have probably put in like one position to not straddle, but just put in one position for a put, maybe. Honestly, I probably wouldn't have done it, because I don't really know. I mean, I would do it when there's a doji, but for a long, hard green candle like this, it's you get a little exhausted, right? So yeah, I don't know. I don't think I would have done that. I think it's already pricing in CPI, and then you get that sell-off. And if the sell-off the sell-off would have to happen after CPI is released, that would be at 5:30 a.m. Eastern time, Pacific time, which is 8:30 a.m. Eastern time, and then the sell-off will commence, and that will pull the market all the way down to I mean, that's not a big drop, is it? Yeah, it's only like a 1.34%. So if the market drops 1.34% tomorrow, like most people's accounts will be drawing down in the pre-market by 3, 5, 4%. Who knows? I don't think it's going to be much of a drawdown. Maybe by 2, 3%, right? So, and then in that 30 minutes, it'll quickly reverse. So the bottom tomorrow is going to be, you're going to try to have to capture the bottom within the first 30-minute candle. It might even happen on the 15-minute candle. So my plan is to open a position. I'll have my wolf waves turned on, and then on the 10th minute to 15th minute, I'll see if I can get an entry in there, but if it gets all anywhere close to 3,935, I'm buying at least 1 or 2 contracts of the 3,980. Okay, and that's going to be a gift. That's going to be like crazy. So, so that's the plan for tomorrow. That you just have to remember that we're looking. The whole idea here is that tomorrow's candle, if it opens flush and then goes all the way down to here before the market opens, right? Then you want to buy that double bottom at 3,980 because that's going to form a doji BLT, right? It might not go all the way down to 3,935. So that's the hard part. Like, where is the bottom, right? And maybe the bottom happens when the trend spikes to like 2 point, something somewhere around 2. So that's the plan, and then the idea is that it's going to bounce all the way back and close exactly where it opened. So that difference between where you bought it, like $10 difference where it closed, and you buy the strike that's $10 less. So 3,980. I mean, this is for the E-mini, so I should be looking at the SPX. Okay, so even the SPX. So you can see the difference between the E-mini and the SPX. The SPX is not even close to the 200-day moving average. So a Fed agent could be in there and pump it a little bit. I don't know if that... You can't see the screen? Oh, sorry. I've recorded the screen too. So I was just looking at the E-minis here, and it's already at the 200-day moving average. So that this is important to know, because most people who trade or post their stuff on Twitter, they post like the SPX and the SPY. And the reasoning that you should not follow the SPX and the SPY as your primary is because it's a proxy of the E-mini. E-mini is the ticker that's traded by the whole entire world, right? Like the whole entire world. Maybe even someone in North Korea is trading E-minis, okay? But they probably can't trade SPX. So so the E-minis are showing that it's already up and flush up against the 200-day moving average, and then the SPX is not showing that. So do you think there's more upside? We'll see, but I don't think that's going to happen. I think it opens flush here, and then maybe the Fed like pushes up a little bit here. I don't know. Anything above this would be nice and juicy profits. But let's say it opens up at 3,969, Elon Musk's favorite number, and then it drops all the way down to. So here's a 6-day moving average of 3,865. So that's like, let's just say $30. So from here, $30 from 3,000. Like 900, 3,920 right here, probably right around here is where the 6-day moving average will be, 3,920. So a double bottom would be at 3,928. So yeah, so $30 from 3,890 would take us up to 3,920. So that's 28 as a double bottom. Anything here, you start buying those cheap contracts with the strike price of from 69 to 59, $10 difference. Okay, and the idea is that this bacon, I mean, I don't think we're gonna get bacon. I think we're gonna get bacon BLT. So BLT with a long red hard candle. Then you pick up those 3,959 strikes for as dirt cheap as you can, like dirt cheap. Try to get like, I mean, if they go down to 20 cents, and if they go down to 20 cents, you're gonna buy 5 contracts, right? That's $100. So you buy them, like, just try to think at like what price, like what are they trading at right now? They're probably trading at like $40 a pop, right? So that's because it's all jacked up on that juice. So SPX for tomorrow, 3,960 69, Elon Musk's favorite number, 69. That's when that has to do with like the launch of Apollo, or the land. I think the first man to land on the moon. I think that's 1969. I don't know. 3,969. All right, so yeah, there's no, yeah, I understand it increments by 5. So let's take a look at 3,900. So it's right here, it closed at 3,969. So we'll say 70. So $10 from there would take us to 3,960. Okay, 3,960 or 3,965. If those contracts right now are trading at $42 a pop, that's very, very expensive. Okay, not even my 10K challenge account can afford 10% of that. So you look at the 3,965, 3,960 is trading at $44, okay, for example, and then the premiums are all jacked up to 45.23%. That's why I posted the option chain to show you the premium. And actually, if you look at the option, that post, the implied volatility jacked up to another 2%. So now it went from 43.24 from when I posted it this afternoon. They're now jacked up to 45.23. 2% is a lot in this chain. So 3,960 or 3,965. If we get an open like at 6 o'clock flush right there at 69, then we want to imagine and prepare what to do before it happens. So it sells, the Fed speaks and says something, I don't know, positive, and everyone gets, I don't know, let me just check when the Fed speaks. Economic calendar. So the Fed agent speaks tomorrow. So I was totally wrong thinking that Wednesday they were going to sell it off. I guess Tuesday they just continued with the path of least resistance. It was, the S&P was trading above the 6-day moving average, so the trend was there. And then Thursday we have a speaker, Patrick Harker. I don't know who this person is, and I wish I did, because I would ask him very interesting questions about what he's going to talk about. But at 7:30 a.m. I'll be still sleeping, right? Because that's 4:30 a.m. Pacific time. So I won't be awake then. Don't message me at 4:30 a.m. Pacific time. So 7:30 he's going to speak, and that's probably going to pump the market a little higher, right? Maybe it just pumps it, makes the SPX move a little higher here this way. We're just all guessing right here, but the most important part is to see where it opens at 6 o'clock p.m. today, right? And then at 8:30 a.m. I'll definitely be up by then. I usually go to the gym at 7:50, okay, around 5 o'clock. And then 8:30 a.m., that's when the CPI is released, okay? So then the market will react in a very volatile way, okay? Because there's a lot of premium in those contracts at the money. It's $44. It's huge. Like if you take a look at the contracts that expire next week, they're at $44. So there's no real. It's a dollar difference between buying a day tomorrow or the contract the day after. So it's super jacked up. Okay, so with the CPI, this is what we want to see tomorrow. The Fed speaks, pumps the market up a little bit, and then CPI comes out and then sells the market off, and even sell it off like if it sells off immediately, then you'll know because everything's down like 1-2%. So that's a 1.5% move from here to here. That's actually only 1%. Well, that's not too bad, right? Okay, that's not bad. So 1% drop, and then those contracts should, the 3,960 calls should be worth, I would say about like, hopefully at $1 or less. With the VIX spiking up, that's the first game plan. The second game plan is to not trade at all until the last 30 minutes, and then do what we just did today. Today I started at 2 p.m. Yeah, so tomorrow, like, I would just buy one contract at the 3,960 for whatever it's trading at. Preferably, I would like to buy it at less than $1, right? Because and then just hold that contract, and then walk away from the computer, come back 30 minutes into the close, 1 hour before the market closed, to see if there's any wolf waves to catch a power hour rally. Okay, if we get a red day tomorrow. So that's the game plan. If the market sells off even harder and then retest the top here at 3,921, then those contracts should be worth less than $1, the 3,960 right there. So that the double bottom, I think there's a gap there too, right? Oh yeah, there's a gap. Okay, yeah, that's even more tricky because there's a gap. I didn't see that. So let me put the gap here. Right, didn't see that gap. Sometimes that customizable gap finder disappears on me. Yeah, so that's the double bottom at 3,928, but if it fills that gap at 3,920. Okay, yeah, so I got the plan. The plan is to see if the market sells off, and if it fills that gap tomorrow morning in the first 30 minutes after the opening bell, then we'll buy that $3,960 contract for anything less than $1 would be ideal. Just one contract, okay? And then just walk away from the computer. You can do a sell limit order to close it off at like 5x, so you can buy it for $1 or like 50 cents and close it at 5. Okay, that's what you would want to do, because you still have a probability, even if you don't close it, you still have a probability of that contract going from like whatever you purchased it to close as a doji up at like 3,970. Okay, and that would be a $10 contract. Okay, so either way, that's the first contract we'll pick up using the profits that you generated today. And then the second trade will be waiting till the last hour of the day for that power hour rally. So because the candle, the long and red hard candle, could continue to be long and red for the whole entire day, right? That's just the way the premiums decay if you're in the long calls. So if the candle is long and red and hard, and you bought the contract at 3,920, the 3,960 at when the gap fills, then you just hold that contract. Okay, you hold it, because it's going to eventually, well, it's going to have to reverse quickly, because the positions that we're all in are in the systems are long. So within 30 minutes it should bounce, and that will close off half. So you want to buy those contracts here, and then just buy one contract, and then put a sell limit order for $3 to $5, and then come back at the end of the day, 3 o'clock p.m. Eastern time, and we'll do exactly the same thing that we did today, and try to catch a move like that went from 30 cents to $5. So obviously there was two opportunities for me to close it. I could have closed it at 270 and then buy it back at 30 cents. But usually I would usually when I do those trades, I usually I just add more. And like I mentioned before, this is a campaign where I'm gonna showcase the portfolio. Hopefully we all reach $10,000 together. But I want to I didn't want to use extra money from my account because, well, first I don't really need to trade, but the main point here is I have to stay disciplined to the campaign, right? I mean, I could have just bought 10 contracts for $300, and like I mentioned before, make like what, $4,000, and you know, and be happy. But that was not the plan from the beginning. I've given up, not given up. I stopped looking trading the U.S. equities, which I've already explained the reason why, because they're all too cheap, or not cheap. They've lost its that leverage effect, right? And resorted to the SPX because it's the one that has the biggest potential, and it kind of behaves very consistently, especially in the last hour. So if we get that sell off tomorrow, then the game plan is very straightforward. Catch that pullback on the first 30-minute candle, see if the gap fills at 3,920, and then put a sell limit order to close that off for like $3, $4, $5. I would say $4, and then come back at the end of the day, 3 o'clock p.m., and we'll do the exact same thing that we did today, but a little bit closer toward the last 30 minutes, so we can buy those contracts for dirt cheap. That's what I should have done, right? We got to be like I mentioned before, because we have such a small account. $100 is like the max that you should be investing in these zero DTEs. 30 cents was just nice and juicy enough, and I was like, oh yeah, that's great. I could have just opened that up with my own account. But then you see now, right? And then the way that the price moves, it's crazy. It went from like $2.70 to like 30 cents, and then it goes to $2, and then it goes to $5 after going down to 30. So that's the game plan tomorrow. Catch the sell off if it sells off, and then come back at the end of the day for the last hour to do something like we did today. But this time, let's try to get into a contract that's at around 30 cents. Okay, 30 cents. Well, actually, yeah, 30 cents. Yeah, 30 cents with they'll allow me to buy two contracts. So if we get 2 contracts for 30 cents and they move up to $20, that's $4,000, right? So that's like we're almost done. So that's the game plan. Tomorrow we have a great opportunity to trade 2 times tomorrow with small risk if the market sells off after CPI. And then the 3,960, we want to try to buy those for at least at most 50 cents. That one's going to be a little bit tough because you're trying to catch a falling knife. But I think if you catch it at 3,920, that's a pretty good deal. If you can't catch it, right, then just wait to the end of the day, and then we'll try to open up three or 4 contracts at around 20 to 30 cents and see if we can close them off for like $10 or $20. And if we're able to open up 4 or 3, let's say we open up 5 contracts for 20 cents, which is $100, and we close off and let them go worthless, because 5 contracts at 20 cents is $100. You made $100. Most people, or some people, made $100. But if you get 4 contracts at 20 cents and they go to $10, you have $5,000 by the end of the day. So this position, the last position at the end of the day, you have to let it go worthless. Okay. Did anybody get the email alert? The calls at 90 cents. So I mean, if you got it, then I don't know which one is faster, but yeah, I think the Discord being in the Discord room is probably going to get the alerts a little faster than the email. Anyways, the trading window tomorrow is very straightforward. It's 1 trade tomorrow at around 15 to 30 minutes after the opening bell to see if this gap fills. and then pulls back. That's a pretty big move, and then come back at the end of the day, 1 hour before the market closes, to see if we can catch that, catch a contract that's worth 20 cents, and then and buy 5 of those for $100. So we're gonna risk about $200 tomorrow, and then if we lose on both, then assuming you got into the trade today, your account will be worth around $300 for taking a risk that can turn $100 into $2,000 to $4,000. Okay, and we won't get this opportunity. This is the one that we want to try and let it go worthless. Now, if you're uncomfortable letting it go worthless when you got 5 contracts at the end of the day, then what you want to do is do exactly what I said in the presentation. Open up 5 or 6 contracts, put a sell limit order for double or triple the price. So if you bought it at 20 cents, put a sell limit order for like 45 cents. Okay, and then that covers the cost of the trade, and then you can let those runners expire worthless, and then if those positions don't work out, then your balance should be at $400 by the end of the day. Okay, I know there's a lot of information, but it's pretty straightforward. If the market sells off, look to buy some dirt cheap contracts when the gap fills at 3,920. If it doesn't fill, then don't trade unless you're really good at taking profits at 30, 40, 50%, and maybe even 100. But then if you miss the entire trade, or you feel uncomfortable trading in the morning volatility, then all you gotta do is come back, work your 9 to 5, right? Finish your 9 to 5 at 4, so you got that 1 hour left, and then 3. Take a break, take a lunch break at 3 to 4, and then trade that power hour rally with me, looking for those contracts for 30 cents. Okay, and that's it. We'll see if we can reach like $4,000 tomorrow with like 4 contracts. That's the game plan tomorrow, I think, from what I can see. So it's super extended. And if I'm wrong, like Wednesday, I thought the market was going to sell off because there's no news. Looks like it just continued to move higher, but now you can see the magnitude of the extension. It's really extended here. So I'd be pretty shocked to see the S&P rise another 2% from here. Like if it pushes all the way up like that. I mean, it could, but I've rarely seen that. I've seen it do it 3 times, which it could happen. Like it could move up to 4,000, because you can see that's the next psychological price target. Yeah, let's take the low here and high. That's the 1, 2. So maybe this is a 1, 2, 3, and then use a fib extension from the low here to the high. Yeah, so 4,000. Yeah, wow, the fib extension levels match that gap quite nicely here at the 4.236. I don't know. It's not gonna happen tomorrow, but what will be able to happen is we get that sell off, nice red hard candle, and I don't think there's any other gaps that I can see. Well, I know there's a gap right here at 3,810. I don't know when they're gonna fill that. I don't think they're gonna fill in January, maybe February or March. But this gap is a problem, so they're gonna fill that this month. And then this gap right here, that's the nearest gap, so that's gonna get filled sooner than later. And I think if it fills tomorrow, that's great, because that's a huge opportunity for a BLT bacon lettuce tomato trade candlestick combo that will basically turn that red candle, the red candle that opens tomorrow, it'll be nice and red, and then pull it all the way back up and close as a doji, and that would be very an awesome trade, especially if you buy it at that gap. Now, I don't think if it does move higher and breaks out, I don't know. I think it's hard to imagine that after it's moved up like from January. So it's already moved up 4.45% in the first week and a half. The average return in January is around 10%. So I would say like a little pause here first, but this fib extension is showing at least a test of that Darvis channel, which means that a move up to 4,049 is likely to happen in the month of January. But the big money here is that gap fill with a double bottom. That's where we're going to buy those contracts, just one. And then you just walk away from the computer, come back at the end of the day, the last hour, and then try to buy some contracts for like 30 cents, at least 20 to 30 cents. Like today, those 3,965 calls traded at 30 cents. So 30 to 20 cents, I think that's the magic number. And then I'll buy like maybe like 3 to 4 of them, and then hold them all the way till the close to see if they 10x, 20x on me using the wolf waves. So tomorrow, I don't think wolf waves are necessary because it's just going to fill the gap and then you just buy one contract. But in the last hour of the day, using those wolf waves to identify that move for the last power hour rally, that's going to be the big winner tomorrow. Okay, I hope. So yeah, in my presentation, yes, my 10K challenge presentation, just remember 80% of the trades that we take moving forward will be at the end of the day, and we just have to kind of get into the pricing of those contracts just a little cheaper. It would have been awesome to pick them up at 30 cents, but I bought them at 90, and I basically doubled that position from 90 to $2, but I have to pay $10 to RBC. Okay, does anybody have any questions, and is everything clear as mud? I've recorded this for everybody, so just mentally prepare tomorrow. It's gonna be a big day. Okay, it's not like you're gonna make $10,000 in the first 30 minutes. It could happen, but I think the likelihood of a big profit would come in the last 30 minutes of the day, just like it did today. So let me just take a look at those contracts right here. Yeah, this one, was this one? No, it was this one, right? Where is it? $3,965. Damn. Look at that. Crazy move. Okay, so nice TTM squeeze comes in at the last. That one came in at, what time is that? 3:50 p.m. 10 minutes. Oh my god. So yeah, just think about it. You don't have to come to the market, don't have to trade until the last 30 minutes, right? That 30 minutes started here. That's 3:30. Yeah, so come like maybe 30 minutes early, 1 hour, just in case, and then we'll do this again. Okay, I had an opportunity to close it here at 270, which if I had closed those contracts at 270 right there, I would have got those contracts back at 30 cents. Okay, but I overpriced them at $3, thinking it would just retest the 3, the 6-day moving average, like near it, but it came about. So that's why there's like nothing's 100% guaranteed or nothing's perfect. It moved right to 265. I set my sell order at $3. Okay, so when you sell it at three, when you do too much, right? If you expect too much, then you know the probability of that is like lower. But at the end of the day, when time and price converge, then you get these crazy like short squeezes because those people don't want to hold on to those positions at the end of the day. But this one right here, if had I closed those off, I would have used $100 to buy those contracts at 30 cents. That would be like 3 contracts, and I could have maybe closed off 2 right here at 250, so that would be 600, and then yeah, maybe just give her one more just at 400, that last contract. So that'd be $1,000. Okay, so I left pretty much because I wasn't so active in trading and I missed my entry. Basically I left $900, which is more than double the account today. Okay, that's unfortunate, but these are important to talk about these problems like as if you have like an alcohol addiction. You should talk about your problems so that the next time you do it and you're faced with the same drink again, you have a little bit more willpower to say no thank you. Okay, so this is good. Like I mean here I was a little bit too greedy at $3. I should have just took it at like 225 to 250. There's obviously a double top right here on the option chain at 245, so getting another chance to close at 245 is obviously a double top, but I was looking for a reversion to the six day on the option contract. That's not good because especially, I mean, the probability of that happening at the end of the day is always there because that's the squeeze. Nobody wants to hold their positions like a huge position into a binary event. Okay, so that's what I'm looking for tomorrow. Just come back. If we all kind of align our mindsets just to kind of focus on these SPX trades for the last hour of the day, then we can look for the same setup at the end of the day. Try to buy at least 5 contracts at 30 cents, and then see if we can close it off at like $5. Just let them go worthless, okay? Because that's going to be a huge payday for everybody. And then if you lose $150, depending on how you close the contracts today, then you'll be down about like $350, which is not bad, right? Because there's always another chance to get into another 10x, 20x trade. We'll have 3 bullets left, but this one was just a little bit tough because so many things are moving around the CPI event with the Fed agent. It wasn't easy to hold, especially look at that. Time's running out, you got like 4 minutes left, and it just spikes right up to like $5. It's crazy, okay? And you literally have to have a position so small that you can afford to hold it all the way to the last minute. Okay, and yeah, so there's two. So if you want to trade the morning volatility, I'm sure a lot of people will be up, but if you want to trade the morning volatility and buy those contracts if the market's selling off really hard, then you can do that tomorrow morning. Otherwise, if you want to have like an easy, relaxed day, come back in the last hour of the day at around 3 o'clock p.m. Eastern time, and then we'll look for the same trade setup as short squeeze into Friday. All right, so that's it. Tomorrow I'm pretty focused on the last hour of the day, but tomorrow morning I'm going to watch how the markets react and then decide if I take a contract. If I buy a contract at the open, I'm putting a sell limit order to close off one at around 2 or 3, depending on how cheap I buy them. Okay, if they don't drop below $1, like the contracts I'm looking at, I'll just get something for like 50 cents to $1 and then put a sell limit order quickly to close it off for like $2 to $3, $4. Okay, I'll alert it anyways. Okay, so yeah, that's the trading day for today. Everything is closed, and I'll see everybody tomorrow, and I'll post my. I mean, I'll, yeah, just keep in mind that today there were no trades taken because a lot of the contracts were trading above $1. I want to buy contracts like less equal to or less than $1 because we have a small account. If you have a larger account, then you can afford to buy $1 or $2 contracts, but then you need to know how to close those contracts out based on your experience, right? Because maybe it goes up 5x and then maybe it goes down like 50% and then goes up 5x. Nobody knows. Like you just look at the market and see how the Cumtix is moving and just move with the Cumtix. But if you want to, because I'm being disciplined with this campaign and I want to showcase that account that I displayed in the trade room, I want to not have any other trades interfering with that number, okay? Because I know there will be people calculating it, saying, hey, how do you bought this contract but you got this, and how come there's like a 30 cent, $50, $25 difference? And then I'll just show them the trade activity, right? Because you have to take into account my commissions. My commissions, the Canadian banks rip me off like huge. They charge me like $12 per trade. So I have to make 100% in order to make any sort of profit. And 100% on $100 is like nothing, right? That's like, sitting here for, I wasn't really sitting here for the whole entire day. I just getting ready for the last hour, but yeah, making like what? Today I made $130 Canadian for sitting here for like 6 hours. Yeah, it's not worth it. I need to get 10x, right? So that's the whole discipline. I want to get that account from 400 to 10,000 using just trading 80% of the time at the end of the day. Okay, if we get like a nice pullback in a long red heart candle in the morning, then yeah, I'll take a shot on some lottos. But we have a high probability, as you can see today, if we got the entry just a little right on those 3,965 contracts for 30 cents, and we bought like 2 at 30 cents, we could have bought 3, and we closed it off at 5. Then we're at 1,500. Easier said than done, but that's the whole game plan, and that I'm gonna stick to. And I was like, trust me, I was so tempted to buy just 10 contracts when they hit 30 cents. But I mean, that wouldn't be, I should have done it in the other account, but I didn't. Oh well. I'm sticking to the plan, doing the 10K challenge with just the $400. And then after 7 trades, I'll decide whether I want to start funding the other account and just taking bigger positions. But from now till 7 trades, I'm just sticking to the plan. And tomorrow with the binary event, yeah, I'm gonna still stick to the plan. I'm not gonna add anything until the 7th trade. Okay, so just making short-term goals about and being realistic about what was planned from the very beginning. 80% of the trades taking in the last hour of the day. Sticking to trades nothing greater than $100, because if you take something $100, like let's say we took those positions, the 3,965 at about 2 contracts, right? And we risked $200. That's 50% of our balance. Then you would have had to go through a 50%, 80%, almost an 80% drawdown, right? And then you may have closed your position out. Okay, so it's important to understand that the small risk you take is always going to be assumed to go to 0, but we want to be in a position where that wolf wave is showing us 10x, 5x potential. And I think I'm going to make when we get closer toward the end of the day, I'm going to avoid to get into a better entry in the contracts today. I think the solution is just to force a trade where you pick the contracts up for between 30 to 50 cents. Okay, I think that's the only way really to get to speed things up in the account, because 6.5 hours of the day, 6 hours of the day, you're pretty much doing nothing, right? And I can imagine all these people are being frustrated. How come we're not in this? How come we're not in that? And you can't pick the pivots with such precision, and especially when someone like me has to send out the email alerts, there could be delay and errors. So better to have a game plan where 80% of your trades are being focused in the last hour of the day. Okay, so then you have more focus, and then not have to worry about the first 5 hours of the day, right? The first 5.5 hours, 4.5 hours, whatever. So you just want to have that game plan ready for tomorrow, and then look for those entries. You have a little bit of a profit that you can burn tomorrow, and if you have like if you made $200 or $100, okay, that's great. But it's just $100 or $200. We're gonna burn it. We're gonna burn it and try to buy contracts tomorrow at dirt cheap prices at like 30 cents. Okay, that's what we want to do, and that's what we have to do in order to grow this account from 400, mine's at 488, to grow it to like $1,300, $2,000 by the end of the day tomorrow. So that's my goal. My goal with the balance wise is, my balance right now is at 488. Made 100% on the on today's position. Could have made more. Okay, whatever. So then tomorrow, the plan is to try to grow the account, getting into some dirt cheap contracts at 30 cents a pop tomorrow, and then try to close the account tomorrow with a balance from 488 to 1,500. Okay, so I'm trying to predict try to set a goal for tomorrow, what I want to see my balance look like, knowing what my game plan is going in tomorrow morning and the last hour of the day. Okay, so I understand, like, yeah, trading in the first 4 hours, it's pretty brutal, because most of those contracts are all jacked up in premiums, and they're like over $1, right? And you don't want to get into a $2 contract with a $400 account. That's 50% of your net liquid. That means if you lose on that position, then you have to make a good trade on the next one. So I don't want to do that. Instead, when we get a setup at the end of the day, buy those contracts, 3 of them, 4 of them, for like 20 cents, 30 cents, and see if it goes up to $10. Because if it does, on 4 contracts goes up $10, you got $4,000, right? That's what we want to do, and that's how we're going to get to 10,000 in a short matter of time. Okay, even if my goal is 1,500, if we get some nice positions and a nice clean wolf wave. Today's wolf wave was semi-clean. It's just I think the error today was not able to close at two on this pop right here, because had I closed here, then I would have bought some contracts with those profits, 2 or 3 into the close. So that was the error. I was too greedy. I should have just taken the profit. So then I get into the next TTM squeeze on that wolf wave target at 3,000. It was like showing a profit target to where is it? Yeah, it's showing a profit target of 423 with this one right here. Okay. All right, so yeah, hopefully everybody made a little bit of profit. I mean, I was a little slow on the campaign with the $400 account, but yeah, that's how a $400 account should trade, right? You gotta trade very carefully, because if you make one mistake, you close a position at 50% loss or 70% loss, even though you designed it for 80, then you're down, right? And then the profit, that's another story. When it rips up like that, that's pretty tough. So now we have a little bit of profit. Get ready to burn it tomorrow and see if we can buy some dirt cheap contracts for 20 or 30 cents, and then close them off for $10 to $20. Okay, so let's try to do this tomorrow and get those contracts for dirt cheap, and sell them Like if I see that, if I see a wolf wave, a nice clean wolf wave tomorrow hitting, showing me like 30, 40 bucks, I'm taking it with like those, I'm taking those $20, $30 contracts, 20 to 30 cent contracts. Okay, thank you very much for your time. Have a good day.